The topic, the physician mortgage. Maybe you've heard of it, maybe you haven't. Maybe you've heard some items over here, but you want to know more. Today we're going to walk through the pros and cons to the physician mortgage. For us, we think it's just another tool in the toolbox. It doesn't mean we always use it, but it's nice to know that it's there. So we're going to walk through all those details. That's all coming up next. Stay tuned. All right, first, I always, from my side of things, I always say we like to lay out the pros and cons and then ultimately give you enough information to say, hey, I'm most comfortable with this route, I'm most comfortable with this route. So that's what we always like to do, list out those pros and cons. So first, let's talk through some of the pros of the physician mortgage. The one that sticks out the most is the down payment. You're not required to have that traditional larger down payment of 20% for a traditional conventional mortgage. Now, it doesn't mean you should always go that route. At the end of the day, I always come back and say, hey, ultimately, we still want to get some down payment down. In a perfect world, we do get at least 20%. There becomes a math equation as well, which we'll cover when we kind of hit the interest rate difference sometimes we see. But for the most part, the big value add to the physician mortgage is that you can essentially go into it with a zero down payment, which is what draws a lot of people to that. Again, not meaning that it's right. If you have a chance to get some down payment down, even if it's simple as 3 to 5%, it can make a big difference. But if you didn't have a chance to save up, through your training years, this is a big value add. The next big item is what we call debt to income ratio. So if you go to a traditional mortgage provider that maybe doesn't understand student loans, and truthfully in today's world, it's kind of hard not to know about them, but the beauty of the debt to income ratio for individuals that are more used to providing the traditional physician mortgage, is that if you're on an income driven payment plan, they can utilize that payment in your debt to income ratio, not more of that larger payment that may be getting pulled in from a more traditional student loan financing. So that's another item that really sticks out as a pro to the physician mortgage. The other items are just really the loan limits. This is also a topic that just because they're not giving you limits, it doesn't mean that you're trying to get the largest amount. The high score does not win here. Same thing with your pre-approval letter. We often joke about this. They'll probably pre-approve you for twice the amount that we thought was reasonable or you thought was reasonable. It doesn't mean that you try to get to that amount. Know your budget before going into it. But it is nice, especially for our physicians that live in more of the higher cost areas. If we look at a certain area in New York City or maybe on the West Coast, that San Francisco area where unfortunately starter homes are close to 7 figures. Same thing with New York City. DC, some of the major metropolitan areas, that traditional starter home could have a very high 6-figure or maybe even 7 figures. So that helps in that capacity. Again, the goal is not to get a high score here. And last but not least is the interest rates. This is the one where we like to crunch numbers on sometimes. So what we have seen is that usually you're going to see a physician mortgage track closer to a jumbo loan. It's not always the case. So sometimes this is where we say we like to do some math. We want to look at, hey, what if you can get a conventional loan, a conventional mortgage with maybe, say 5% down? What's the rate there? Okay, now that's going to have PMI on it, private mortgage insurance, because we didn't get 20% down. Then let's look at the other side. What does the physician loan look like with maybe that same 5% down, but then no PMI? Does that have a higher rate than our conventional mortgage? If it does, we want to do some number crunching. So those are the main pros for the physician mortgage. Again, it doesn't always mean it's your default. It's not the thing that you want to use. It's nice to know that it's there. It's an extra tool in the toolbox. And just know that you always have that as a backup plan if you don't have enough time to build up a down payment. But again, in a perfect world, we're trying to get some down payment down. All right, next up is the drawback. So there's not many drawbacks to it. The one that really sticks out is what we just covered on the pros, the interest rate. If there is a difference in interest rates compared to the physician mortgage versus a conventional mortgage, PMI, no PMI, that could be the larger issue there, because interest rates, while they seem simple and it's just, a little 3-digit number, at the end of the day, that has a large effect on the total interest paid on a mortgage. So that is traditionally the biggest drawback we see with the physician mortgage. And again, the down payment, we still want to try to get some down, but for the most part, a higher interest rate is one of the larger drawbacks. The other one that we don't see all that often, but sometimes certain homes, condos are very common. We don't see it all that often, but some certain residents will not allow you to actually use a physician mortgage. So just keep an eye on that. Again, I don't know if we've ever actually seen that in practice. We've heard of it, we've never seen it, but just keep that in mind too. Now, when you're sitting down with your mortgage broker and you're getting pre-approved, they'll be able to tell you that before you go shopping around to say, hey, don't look at this type of home. It's not covered with the physician mortgage, but your traditional primary home is, whatever the example would be. So big setbacks are, the biggest one is going to be interest rates. The second one is it may not allow you to buy the type of home that you were looking at. So just keep an eye on those. But again, your mortgage broker should be able to walk you through those items. Who qualifies for a physician mortgage? So pretty simple here. This is going to be our physicians, whether you're a resident or fellow or even an attending. This can have some variability to it. Usually it's between 7 to 10 years into attending. So if you're a later career attending, you're going to start to lose out on this. Essentially, their hope is that you have enough money for a down payment. And the last two big groups are dentists and veterinarians as well. So those groups, we'll kind of clump them together and say medical professionals, but even being more specific there, residents, fellows, attendings, and then dentists and vets. Most of the time they're going to look to see if you're in training, they want to see that contract. They want to, walk through the traditional underwriting of a mortgage, making sure that you actually are a physician. So there will be some confirmation there, but truthfully, if you've ever gone through a mortgage process, the documents that they're asking at the start, you're going to have to unload a lot of documents anyway, so it'll just be listed in your documents. Again, a mortgage broker will walk you through that, but just that's the groups that actually qualify for that physician mortgage. Next up are the cost in a physician mortgage. So this one obviously is going to be all the numbers are variable, just based on what you're looking for. But here's the things to always keep an eye out for. You're going to have your principal and interest. That's your traditional mortgage. That's what we call P&I. At the start of any mortgage, you're going to pay a lot more towards interest than you are to principal. That's all common. That's normal stuff. So principal and interest are the first two. Next up, you're going to have escrow. Some individuals don't like escrow and they'll just pay directly on their own. A lot of individuals prefer to have it because it's a forced savings mechanism. So most of the time, escrow will cover your property taxes and also your homeowner's insurance. Homeowner's insurance usually is not going to trip you up. The property taxes, depending on where you live, can be a larger number. And if you ever wonder why your mortgage changes on a month or a year-to-year basis, I should say, it's not because your principal and interest is changing, assuming that you have a fixed mortgage. It's your escrow, it's your taxes and insurance that are actually changing. So if that's happening, just know that it's probably because your property taxes went up. Maybe your homeowner's insurance went up a little bit because of just an inflation rider, whatever the example would be. So those are the main three parts of all mortgages. Whether you go get a conventional mortgage or you go get a physician mortgage, you're going to have principal and interest. And then you're going to have your escrow. Escrow usually includes your property taxes, your homeowner's insurance. If you didn't get 20% down on a conventional mortgage, you're also going to have something called PMI, private mortgage insurance. So keep an eye out for that as well. And then last but not least, depending on where you live, you could have HOA fees, which is just homeowner association fees. For the most part, you're going to see that more in condos and apartments to kind of keep up with the building. In single family homes in neighborhoods, usually you don't see that. That's not always true. Where we live in South Philly, we don't have any HOA fees or anything of that nature, but some of the apartment complexes out by our house, they do have HOA fees. So it just depends. So make sure when you're looking at that payment, don't just look at principal and interest. Make sure you have an escrow built in there. If you have PMI, make sure you're calculating that. If there's HOA fees, usually they're not too high. Now, if you get into a higher cost home in a larger area, say Chicago or New York City, you can see some pretty substantial HOA fees and even property taxes. New Jersey's literally just across the water from me right here. You have high property taxes in New Jersey. You have great schools, but you have high property taxes. So don't just go home shopping based on the principal and interest. Make sure you're including that entire amount on your actual home budget. We put a little section on here on where can you find a physician mortgage. I'm just going to put a little disclaimer in here too. So first and foremost, we think two great resources are the White Coat Investors page and then Physician on Fire's page as well for physician mortgages and physician mortgage brokers, individuals that can shop numerous providers and then give you, the best option. Keep in mind too, we have worked with a lot of clients and we have seen some weird physician mortgages come to us, and what we have come to believe is that they went to providers that didn't actually know what a physician mortgage was. They kind of piecemealed something together and then they told them it was a physician mortgage, when in reality it was two separate loans, and it gets at this hot mess. So just always make sure that you're going to a trusted provider and someone that truly knows what a physician mortgage is if you're going that route. Conventional mortgage, those are more common. You can pretty much look at most of your large banks. And from a quote perspective, we usually say this: go to your main bank, get a quote there. Contact one of the mortgage providers through Physician on Fire or White Coat Investor. Let them spreadsheet some providers as well. And then check out an internet option. Ally, they do theirs through Better. See what their rates are. Maybe Rocket Mortgage. And once you go through all those, you should have a pretty good idea of where the average rates are for what you're looking for. So make sure you also shop around when you're looking at those different mortgage rates and even different mortgages as well. Lastly, is a physician mortgage right for you? The answer of all financial planners, sometimes it seems like it depends. So for me, it comes back to what I kind of led with there at the start. It's a great tool in the toolbox. If you are in training, and this one, we steal this one from Dr. Dolly as well. We don't think you should probably be buying a home in residency. Can it make sense sometimes? Yes, of course it can. But if you kind of take like that general guidance, most of the time while you're in training, buying a home can be a tough financial planning topic to get ahead of. Again, doesn't always mean that it's wrong. It's just usually we try to avoid it. But for the most part, if you have to get a mortgage and you don't have a down payment and you're a physician, dentist, vet, you have an extra option to look at. Does it mean it's right for you? No, it doesn't. And in a perfect world, we always try to get 20% down, even 10% down, even 5% down. Those are good numbers. Get some equity in the home. And again, the more you get down, the lower your principal and interest payment. So keep that in mind. So it's not a hard yes or no to is a physician mortgage right for you. It depends. So know your situation. Talk to a mortgage provider. Talk to a financial advisor, and walk through the pros and cons to both routes and look at both routes. Maybe that conventional mortgage with PMI is still a better plan than a physician mortgage with a higher rate but no PMI. Because remember, PMI eventually will fall off. So just make sure you're reviewing both sets of it as well and doing your homework before you make a very large purchase. All right, and that is all. So we hope you enjoyed this video of us reviewing the pros and cons to a physician mortgage. We put some bonus resources in the actual blog post. We have a neat little workflow that you can walk through on buying your first home. We also put Physician on Fire when he utilized his first physician mortgage. We kind of have his real life story in there. So check out the resources. We hope you enjoyed this video. You can also click on the link for the full blog post as well. As always, thanks for tuning in, and we'll catch you on the next video.